Welcome to Asset Preservation Hour. I'm your host, Randy Major, and joining me today from Asset Preservation Tax and Retirement Services is owner and advisor, Stewart Willis. Hi, Stewart.
How are you doing?
I'm so good. How are you?
Unbelievable.
I'm so happy to be here with you today. We have a lot to talk about. We're getting into that time of year now where folks are really focused on new resolutions, new goals, being physically fit and healthy. How as important is it to be financially fit?
Well, I think it's really important. I mean, for me, I've got to work on some of my physical fitness as well. As you can tell, I'm pushing this button to the limit here on my jacket here. So I need to get both physically and financially fit here. But no, I think, Randy, being financially fit is tremendously important. And I think oftentimes what happens is people just don't have, the proper path to do it. And I think one thing that they can do is, number one, they need to set a goal, right? They need to make sure they know exactly what they're trying to achieve, because, they have to be attainable goals, something that aren't, too uncomfortable. Next, they need to make sure that they build a routine. I think once you get into the habit of things, it's just much easier, right? So it's like, I just had shoulder surgery, so I know it's breaking my routine, and that's what I'll blame the extra weight on. So all of you who want to comment that I'm too big for TV, well, I get it. I'll blame the shoulder for it. But you know what? Create a routine. I think it's really important to start on that treadmill maybe, and also, start putting away money for retirement.
Right. And I think, all of these points you're making, your goals just set you up for success in any area of life. But how many people really put these financial goals on the back burner and until it almost becomes too late?
Yeah, that's, what we see a lot of times is we'll get calls from people that say, hey, you know what, I'm, going to retire in a few years and I have nothing saved. And quite honestly, that's a really difficult thing. Being broke in retirement is a really tough deal. We are more than happy to help those people that have taken retirement seriously. If you're just starting out now, one of the things we suggest is just start creating those habits. Start putting the money away, because you don't want to have to work until you're 85 years old, because making it on Social Security alone is really tough. Now, we just saw a tremendous increase in the cost of living adjustment for Social Security, but we're also seeing massive, price increases here. Inflation is the key word right now. Everybody's super concerned about inflation, and I think it's really, really important to make sure that your goals are in line with keeping up with inflation. A lot of people, have money off to the side. They've been really concerned about, the volatility of the stock market. And so they've kept money in their checking accounts or their savings accounts. Well, now after this new inflation statistic came out, and we're hearing 6.2%, and I think a week ago we heard 7.2%, of estimated, inflation. People realize their money's becoming less valuable. So they really need to make sure that they start, creating the habit of putting that money away. And as a New Year's resolution, create that habit. I think that's the one thing. Get the ball rolling now, and it makes it way easier down the road.
Right. So if someone has maybe had a plan that they really haven't looked at or adjusted, or now more than ever is the time to really dive into that and see if their plan can keep up with the times.
Yeah, and you know what? I think you're absolutely right. You need to have benchmarks to make sure that it's going to keep you in line. And the one thing you have to do is make it fun. I remember even in college, I was a college athlete, and even in the off season, I would still train, but I would train for football season so that I could be in shape. I wasn't actually playing football. I rode on our crew team, but I would train as if I was getting ready for football season as well. It's just, you got to have these short-term goals as well as long-term goals. Absolutely. Too. And I think the same thing pertains to putting away money. Once you create the habit of just saying, hey, let's up our 401k from 3% to 6% or 6% to 10%, or you decide to start maxing it out, I'm telling you, it's going to make life a lot easier if you just start putting that money away.
Stewart, what should someone be looking for in a financial advisor?
Well, I think the one thing you want to do is if you are going to, take the position that, hey, I'm going to finally take this seriously, you've put away all this money all this time, you need to make sure that you have someone there to help you. And if you're looking for an advisor, the most important thing you do is to make sure that they're a fiduciary. I think that's number one. You want to make sure that they have your interests above their own, that they're not receiving any sort of back-end compensation from any sort of mutual funds or fund families of that sort. Number two, you want to make sure that they're a holistic planner. At Asset Preservation, not only do we look at investments, we look at taxes as well. I talk about the nightmare of having a tax office all the time. It's just an incredible amount of work. And the reason we have taxes involved at Asset Preservation isn't to prepare taxes, it's to do tax planning. So it's really important there as well. You want to make sure that they have a good understanding of estate planning too. At Asset Preservation, we have estate planning attorneys that we've dealt with, the same attorney for 15 years. We have a really good relationship there. It's really important to make sure that they're holistic in that way as well. And also, Randy, I think it's important to make sure that they know how to plan retirement income. And, as you start merging from this kind of, accumulation stage in life, you're now going to start taking income, which is a distribution phase. And things are totally different. You could have your foot stuck on the gas during your accumulation phase, but there comes a point where you need to make sure that, once you've won the game, you don't need to be crashing out on your victory lap, right? You want to make sure that you maintain the success you've achieved. And I think it's really important to have a distribution plan.
Now, you mentioned tax planning, and this ties right into short-term and long-term goals, really, because tax preparation is short-term and tax planning is what's going to help preserve your nest egg, right?
Yeah, absolutely. I think it really is the central topic we talk about, not just investments, but also taxes. And I think it's really important to understand where we are tax-wise right now. Listen, things are about to change here, pretty dramatically in terms of the way that you're going to pay taxes. So for the higher income earners specifically, we're going to see dramatic changes. Especially to the Roth and the ability to contribute and convert and all of those other things. But I think it's really important to have your eyes on tax planning. And I know when we come back from break, we're going to talk in depth a bit more about tax planning. But I do have an offer for the audience today. And that offer is, if you give us a call at 833-652-7829, what we're offering today is a complimentary portfolio review. Make this New Year's resolution to actually be financially fit. If you've done your job, if you have put money away, for your entire life, and now you're concerned that we're going to start seeing some market pullback or you're not tax efficient, just give us a call. Or if you click on the screen here, we have that the QR code. And if you click on that, it'll take you to apsitaxes.com. You can request a complimentary portfolio review. All you have to do is give us a call at 833-652-7829 or click on that QR code, and we'd be glad to do a complimentary portfolio review at no cost.
Thank you, Stewart. The viewers at home, the phone lines are now open, so please do give us a call at 833-652-7829. We're going to take a very short commercial break, but when we come back, we're going to dive in deeper to compare tax planning and tax preparation. So if you don't want to miss that, stay tuned. We will be right back.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back to Asset Preservation Hour. I'm your host, Randy Major, and today joining me is Stewart Willis. He's owner and advisor of Asset Preservation Tax and Retirement Services. Hello, Stewart. Having a great show today. And right now in this segment, we're going to dive in a little deeper and compare tax preparation and tax planning.
Yeah, I think a lot of people will say, hey, I've got a great tax guy or a tax gal, and they're really happy with the services they've received, and their tax preparer is probably doing an amazing job. But what we're talking about today is the difference between tax planning and tax preparation. Now, tax preparation is simply the filing of your taxes. So between February and April 15th, and it's been May 15th for the last couple years, the preparation is just about, filing your taxes, about, kind of adding the X's and O's up of what you owe and what you paid, and, how much more you're going to get back in a refund, claiming all of those deductions and so forth. What tax planning is about actually creating an efficient environment for taxes around you. For example, there is the top of certain tax brackets that you don't want to go above. And what I'm going to do is I'm going to pull up a slide here that's showing you what the current environment looks like and what it looked like in 2017. So as you can see, the red is the pre-2022 taxes, so we don't know exactly what they're going to look like at this point moving forward, but up through the end of 2021, that's red. Previous to 2017 was blue, so red was after the Trump tax cuts. Now, a lot of our clients are falling in between that 22 to 24% bracket in red there, and if you take a look, you can take a look that 22% bracket used to be 25 to 28% when you include standard deduction. The 24 used to be 28% to 33%. So we're in this very efficient window and have been for a few years. This tax rate is not going to last beyond 2026. We know that those Trump tax cuts are going to sunset unless there's some, new legislation that passes. And who knows whether or not that's going to happen. But tax planning is all about making sure that you're taking advantage of your bracket. So if, for example, you look at the difference between the 22 and 24% bracket, that's a very small change. But the jump from 12 to 22 is a really big change, right? It's nearly double. So what we try to do is not jump above those really big brackets. Now, there are a few potholes out there, landmines, so to speak, that you really want to avoid that are in between the 22 and 24% bracket. like IRMA, IRMAA. That's the penalty you pay on Medicare when your income is too high. So it's really important when you're doing tax planning to know what, kind of boogeymen are hiding out there, and I think it's important when you're making your New Year's resolution and making, your promise to yourself that you're actually going to start planning now, that you consider all of those. And it's really important to make sure you have an advisor that not only does financial planning, but tax planning as well.
So you have a tax office and you run the tax office. How much planning can you get done during tax season?
I've said this in previous shows, God bless them, these tax preparers are unbelievable. They're working their tails off. They're working 10, 15-hour days during tax season. I've said before, if you're getting tax advice for tax planning during tax season, you're wasting your time. These people are doing their best just to keep up. It's like drinking from a fire hose, It's a lot of information. They're seeing tons of clients. They're just trying to make sure that they're accurately reporting your taxes for the IRS, because obviously they don't want to create audits. They don't want to have to do amendments. But that is not the time to do tax planning. It may make sense to say, hey, you need to do a Roth contribution or an IRA contribution before April 15th. But that's not tax planning. That's the simple stuff. To me, Randy, it's impossible to do real tax planning during the tax season. Most of ours, we just completed here. So at the end of the year is when we do most of our planning. And I'll tell you, 2021 had a lot of obstacles. First of all, we didn't know what the Build Back Better plan was going to look like. Was it going to be retroactive? Because the first two iterations of that had all of the tax increases retroactive first to April of 2021 and then to September of 2021. So we don't know what that's going to look like. So imagine as a planner, when we're trying to say, hey, should we push our income to the top of the 24% bracket? Does it really make sense? Well, what if they retroactively change the taxes? So it was a really difficult year for us. It really did have us pushing up right up until literally right up until Christmas to get all of the planning in. But you know what? We made the best efforts we could. We made some really, really safe decisions for most of our clients, and we executed. And I think the important thing to do is just to make sure that you take steps to execute a plan.
Gosh, I mean, it seems like if this is just a reason alone to see a professional tax planning, I mean, it sounds so complicated you couldn't possibly do it on your own.
Yeah, I mean, listen, we're blessed to have some clients that are really smart clients. I mean, we have huge amount of clients. These engineers from Honeywell and Boeing are geniuses, and some of them come in with these crazy spreadsheets and all of these iterations. I had a great guy come in from a software company the other day that's really projected out his numbers for the next 20 years. The problem is you only know what you know, and there's a lot of things that are changing, like legislation, right? As taxes start to increase from where they are today, you need to make sure, does it really make sense to think about tax deferral right now when taxes are going up? And a lot of people, these high income earners right now, are deferring taxes until later. But at the end of the day, once you save millions and millions of dollars, tax deferred, oftentimes your taxes are higher in retirement than they are while you're working, because the house is paid off, you have no more deductions. Hopefully we get the kids out of the house by then. I'm trying to get rid of one of mine here any day now. We have a graduating senior. I'd like him to move out to college. Any hint of going to college locally means he'll be mooching on mom and daddy a little too long, right? But honestly, things change. The expenses go down from a deductibility perspective. Your ability to deal with housing costs, all that stuff.
Right.
All that stuff changes. So it's really important to make sure that your plan makes sense in retirement.
So if taxes are so important, why aren't more advisors talking about it?
Well, I think people have started to. I think, the one blessing that we've had here is that I think, what I'll call our competition, we've seen starting to advertise about tax planning and, hey, you do it all in one place. At the end of the day, a lot of them don't actually have a tax office built in. They have a referral network of people. And once again, the problem with that referral network is that even if you have a great network of CPAs that you refer to, the problem is you end up double dipping, right? See, the advisor doesn't want to absorb the cost of running a tax office, because I'll tell you, our tax office isn't profitable. We lose money doing taxes. It's not meant to be a profit center. It's meant to gather information. So most people don't want the hassle of actually running a tax office, because it is a pain, I promise you. It's one of those things I want to get rid of every year, but it's such important information that there's no way I can ever do it. So it's a pain, number one. Number two, most advisors are prohibited by their firm from actually giving tax advice. So yeah, and also there's the fact that if they start doing tax planning and they say someone has $100 million block of business and they convert all of their assets, all of their IRA assets under the 24% bracket, their $100 million block of business is now $76 million. So they've given themselves a massive pay cut as a fiduciary. So a lot of advisors just don't want to go down that road.
All right, Stewart, we have to take a very short commercial break. Let's quickly remind the viewer of the offer we have today.
Yeah, all you have to do is give us a call at 833-652-7829, or very easily, you can click on this QR code that's on your screen right now. That QR code will take you right to apsitaxes.com. Super simple. There's a complimentary portfolio review available. And what we'll do in that complimentary portfolio review is we'll take a look at all your expenses, any tax issues we see out there. What kind of risks are you taking? Are you taking more risk than you really think you are? And it all comes complimentary, no cost at all. It's a great time to do this New Year's resolution and take action today.
Thank you, Stewart. To the viewers at home, we will be right back. Please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
Welcome back to Asset Preservation Hour. I'm your host, Randy Major, talking today to Stewart Willis. And Stewart, this is my favorite part of the show. The phone lines are busy and people really have a lot of questions, and we're going to get to answer some of them today. You ready?
Let's do it.
Okay, we have Peter in Scottsdale. He says, my wife and I are approaching retirement, and our financial advisor is recommending we put about 70% of our nest egg in stocks and 30% in bonds. This approach seems risky to me. Is it? My preferred mix is 60-40.
And did they say their age on there?
They did not.
Okay, well, a 70-30 portfolio is very appropriate for some people and not for others. I think, as we know, we are basically at the highest peak in market history. You know what I'm going to do is I'm going to pull up a slide real quick. It's the S&P 500. And this slide here will show you where we are in the market today. If you take a look at this S&P 500 slide, what it'll do is it'll show you that we are at the highest peak in market history, plus or minus a couple percentage points, right? So does it really make sense to bet all of your chips on this market? Well, betting 70% of them in this market is probably a pretty big risk if you're really close to retirement. For a lot of people, they can tolerate the risk and they're not afraid of that sort of volatility. The problem we also see is that a lot of clients feel like they want to be aggressive. They want to be aggressive on the way up, but as soon as we see any sign of volatility or shakeup, they get nervous and they call and say, hey, we need to go to cash. So I would just say it all depends on how your reaction is. And that's why we do a pretty in-depth personality review when it comes time to analyzing your risk to actually find out what kind of risk can you take. I think it's important for your advisor to know that.
Absolutely. I mean, it's about a personal relationship and figuring out what's best for you.
No question.
Okay, let's go to another question. Yeah. Okay, Patty in Peoria, she would like to know, the more I watch the show and learn about the many different financial tools that exist, the more I dislike my 401k. Is there anything I can do to broaden my options, or am I just stuck with what's on their menu?
Well, the interesting thing is it all depends. There are some rules that basically allow you, if you're over 59 and a half and you are in a 401k, many employers allow for you to actually roll over your 401k into a managed IRA at an outside institution. At Asset Preservation, we manage money at TD Ameritrade, which is just merged with Charles Schwab, as well as Fidelity. So we have choices of either of those two custodians, and we can actually manage those professionally. Now, there are some downsides. When it comes to moving your 401k to an IRA, you lose some of the loan provisions, for example. There are some what we call ERISA protections inside the 401k that aren't, a national standard at this point inside the IRA, and we believe that's going to change as well. But you absolutely have tons of choices. I think it's important to be professionally managed. During that market I showed you, the last 12 years, a blind chicken could have done well in the market, And, so a lot of people have this false sense of security about their knowledge of the market. And I'm telling you, it's a dangerous one. Okay,
so important to know your options. Yeah. Okay, Jennifer in Sun City, what, if any, are the risks associated with a Roth IRA?
Well, so a Roth doesn't either add or take away any sort of investment risks. A Roth isn't a kind of investment. It's just a tax classification of the underlying investment. So it's, a wrapper, so to speak. One of the risks of a Roth, if I were to think of one, it's that you can't touch it until you're 59 and a half without what is essentially a penalty. Now, does it make sense to, put away all this money post-tax if you're going to need access to it before 59 and a half? I'd say probably not. You want to make sure that you have different buckets of money. You don't want all your eggs in one basket. That's why I think diversification of your tax status makes sense too. So you want some non-qualified assets, some IRA, some Roth. You want a bit of everything so you have choices of where you can pick from.
Well, Stewart, we're already at the end of the show. Can you remind the viewers of the offer you have for them today?
Absolutely. So once again, if you just give us a call at 833-652-7829, we will be happy to meet with you at one of our 3 convenient locations. We have an office in what we call it our West Valley office. It's right there in the Sun City, Peoria area. We have one in Tempe, right here where we're filming in this studio today. We also have a great office in Scottsdale. What we'll do is offer you a complimentary portfolio review where we'll look at all the risks, all the fees, all the expenses, and we'd be glad to give you a second opinion. But you have to take action. This can be your New Year's resolution to take action today. 833-652-7829.
Thank you so much, Stewart. To the viewers at home, thank you so much for spending time with us. We hope you have a beautiful rest of your day.